All right, guys. Today just going over, like I said before, but for the recorded top gainer strategy. It's something that I've been doing in my own group for quite a while now, and I've been able to catch some really good short plays off of it. Uh, these are high risk, high reward type trades, so we'll go over kind of the way to size this and how to leverage so that you don't completely lose your ass trading these. But there's definitely a learning curve with these, so I figured today would be a good idea to just go over the um, the Google Doc that we made here. So I'm going to bring this up if I can on the recording. All right. Okay. So top gainer strat. First thing you're gonna do is on whatever exchange that you're trading on, you go to the gainer section. I've got the gainer section here in the doc. That's just for Blowfin. Here you're just gonna see this top in the last 24 hours what coins have moved up the most, and you're gonna usually the top three is like where I'll focus in on for these strategies. That's why I call it the top gainer strat. So depending on the day, like if you have a pretty active day on Bitcoin and stuff like that, then you can see some of these altcoins or shit coins moving up anywhere from 40 to 200% or higher, really, on the day. And you want to find one of them that's gone up the most and look for a slowdown in upwards momentum. So this is where we're going to be. This is where it kind of gets a little bit tricky because timing tops is not easy no matter where you're doing it on what kind of asset. But with shitcoins, you have a pretty good opportunity to make a shit ton of money because a lot of them are just pump and dumps. So once it gets to a certain price and it tops off, and the people who are holding them sell off and they make their money, there's usually a pretty violent downside move that can be like extremely profitable on leverage. Like I'm talking 200 to 500% gains in an hour, you know? So uh, we'll go over this more, but you can identify the slowdown with a huge upside candle that usually is touching a psychological round number followed by some large top wicks showing resistance or sell pressure. So you're going to want to look for, I'm not sure how well versed everybody is in technical analysis, but we'll go over more of the technicals of it in the next presentation where, we're looking at candlestick structure and how to identify resistance. But the rule of thumb really is just looking for big top wicks. If you're looking at a candlestick chart, then a top wick usually signifies that there's a resistance or there's sell pressure. So an example of like a round number, a psychological round number that would be a good idea to go for a short is say like a coin goes from 50 cents to a dollar. There's going to be a good chance that there's a decent amount of limit sell orders at that dollar level, in which case there would be sell off after it hits that price because there's no longer people bidding it up there, and people are selling out of the position, right? So you can expect that there you can make a decent amount of money short. This is the example from Saturday's trade on Folk, which I used the strategy to find that. Folk was up over 200% in 24 hours from $14, and it peaked at 46.85. My first attempt was at I think $40 around that psychological round number, which ended up failing. So you can see here I've got my sell, like I sold. I got stopped out on this buy. I've reattempted. I got stopped out on this candle. So that was two fails. But on the third attempt here, I was able to catch a pretty substantial downside move. I didn't buy until we were around 27. So I caught a close to a 40%, a negative 40% dip, and it went down to 20. So it was more than a 50% decline from the top. So this is just like a perfect example of pump and dump crime. You could see like it went up here, people got out of their positions that they might have been bag holding and sold off at a profit, and it was consolidating around that $22 level after the initial move, and it dumped below it. So this is just peak pump and dump activity on shitcoins. So it's important to note, like I said, timing a top is extremely difficult. You can see here that it took 3 attempts before I hit the trade that I really wanted to. So what we're going to do to be able to mitigate that is we're going to put in probably a quarter of our regular sizing. Like say if you're in a safer trade that you'd go maybe $1,000 on, here you'd put 250, right? And you'd go 5 to 20x max, really depending on the coin. Some of them, like if it's moving 1, 2, 3% on every few minute candle, then going at 20x leverage is going to be really tough. You know, you're going to get probably insta stopped out. So going with like 5 to 10 might be the better move. I found with folk that 20 was too much on the first 2 attempts, and then I switched to 10x, which I probably should have just done on the second one. But neither here nor there. If you kind of get the idea, it's all about kind of finding that sweet spot in leverage where it will allow you to stay in the trade and deal with some of these volatile candles. And also the quarter sizing means, you know, even if you lose a couple of them, if you go 2 to 300% on one trade, then losing 50% a couple times isn't really going to matter. You're going to end up profitable at the end of the day. So that's why risk to reward is pretty important here. You're not going to want to take a couple 50% losses just to take a 50% gain. This is, you know, swinging for the fences on these trades. Like you're going for those really big 3 to 4 to 5x gains. So this will allow, you know, like I said, for you to attempt it several times. A lot of the times on these, like once you hit the top, you're gonna get that like minus to 30, 40, or minus 10 to 30%, maybe even more, like on folk. So the key with finding this is recognizing changes in momentum, which is probably a bigger topic than this entire strategy. So it sounds complicated. It really isn't. It's just being able to identify resistance and in a slowdown in momentum. So like for the example I have in the Google Doc here, you could see it made a pretty decent bounce. And then there's a couple wicks here where it was finding resistance. And then this shooting star candle. So a lot of people will call them like shooting stars. It's usually just a liquidity candle where people, you know, shoot the price up one last time, get out of their positions, and then that allows the price to fall because nobody's bidding it anymore, and nobody's willing to buy it up this high that wasn't just sitting in it for a while now anyway. So you see on like pretty much every coin like this, there's going to be one of those candles. That's why it's hard to time the top. You're almost better off looking for that shooting star and say, okay, we've had that candle. We're consolidating here. The price hasn't really moved up. It's sitting at, you know, 330, or in folks' case, like shot up to 46. Then it kind of stuck around 43 for a little bit. It kind of signifies that maybe the momentum is dying out and that there will be a dump. So what goes up with these shit coins normally really, really goes down. So the key is to look for these shooting stars. I call them, like in the document here, I call them trap candles or scam wicks, because really what they do is they trap people, trap longs while they sell off, and sometimes it is really just as simple as these coins are scams. So, you know, people getting out at their preferred price, and then they're finally out of whatever bag they were holding, and nobody's bidding up price anymore, so it's gonna dump. So, like I said, this is an example of one here at that 323, and then it was able to fall back down more. This is actually an example that I pulled out of the current gainers section on Blowfin right now. You can go take a look at it. I think it's Beat, B-E-A-T. Double check that now, but yeah, Beat. That's it right now, and it's continuing to go lower. Look at it. It's at 282. So this would have been a banger for a short trade, because it got that candle to the upside and then continued to drop. So just in the last 30 minutes, it's down 8%. So if you were at 10x, you would have just made, you just would have made 100%, or 8%, you would have made 80. So the things to identify here is just that kind of shooting star candle, a slowdown in price moving up like crazy. You're gonna want to see it, like for these, the higher it is up on the day, the better. You don't want to kind of like try and time a top on one of these shitcoins when it's plus 15 to 30%, because they are more volatile, so they will have more chances to go up. And yeah, like this is something that I wouldn't recommend it being a main, like if this is your, this can't be your only thing, your only strategy going into, because it's like you can lose a good, like a few of these in a row like I did on Folk, and then hit, and then you'll come out with good money, but this can't be like your only strategy. So this is something that I'd recommend doing, not too often, but if you see a good opportunity, something's way overextended and you know that it's just some bullshit coin, then this is a great strategy for getting in and taking advantage of that. Obviously, you'd want it. There's always more upside potential. That's just how assets move. Like a long would have paid way better on the bottom from a 200% move, but unless you're really in the know on some of these shitcoins, you're not gonna get in early. So shorting it is probably where you're gonna make the most of your money. So in part 2, I'm going to cover more about candlestick structure and momentum and looking at support and resistance to help you identify momentum changes. And we can go over some of the momentum indicators, such as like MACD and RSI, that you can kind of add to your arsenal when you're trying to figure out if momentum is indeed changing or not. So that's pretty much the basic concept. Take some questions from you guys if you guys have them. It's pretty basic. Like it's almost like the gambler's roulette of trading, but if you get good at identifying them, you can do pretty well.
Makes sense.
Yeah, it's not like a deep strategy that no one's ever thought about, for sure. Like that, there's definitely people out there probably doing this too, but and it seems pretty, like, oh, okay, so I just short whatever's moving up high, but there kind of is an art to it. So which usually is involving that deeper part of being able to identify the momentum switch, and being able to manage your risk to reward, so that even if you lose a couple times, that it doesn't matter, you get the winning side, you finally get it to drop like you want it to, then it all kind of pays off. So yeah, any questions from you guys?
You mentioned that you try not to lose more than 50%. Is that correct?
Yeah, for sure. Like especially on these, like you'll find that on altcoins and shitcoins in general, on leverage, because they are more volatile than like the blue chip coins like Bitcoin and Solana and Ethereum, your liquidation price is going to probably be uh, closer to entry than it would be on like Bitcoin or any of those. So it's a good rule of thumb to just put in anywhere from like a 35 to 50% stop loss, and in that way it gives you chances to you're not losing your entire, like the 100% of whatever you put in, and you can still use that towards next rounds or attempts.
Would you recommend risking like less than 5%, like maybe like a 1% of your portfolio, or what do you think?
Yeah, like these definitely are going to be on the lower end of your, like I recommend a quarter of your normal sizing. So like say if you risk like 4% on a regular trade of your account, which is probably close to, if not just a little bit higher than what most people do, then I'd say then yeah, go in with like 1% of a port. Or if you're feeling a little bit crazy, do like 2 to 3. But keep it lower than what you would normally put into any other trade, because this at the end of the day is like, it's definitely a high risk, high reward scenario. Cosmo, get out. Oh, Jesus. Sorry, my dog's fucking with me. Yeah. So this is just kind of like a fun strategy that I've kind of implemented and added to my trading in the last year or so. I've had a lot of really like fun, profitable trades using this strategy. So I figured that I'd share it with you guys to show you how you can make some good money off of these pump and dumps, you know. But yeah, so that's pretty much it for that. I'm going to continue in part 2, and we'll go over some of the more basics when it comes to learning and recognizing momentum switches and how to do that. But for this one, I will end the recording here, and then we'll move on to just some basic analysis on Bitcoin.